What is this stuff here? Great Lakes Wealth. This is a chapstick I was just given. Here, hold on, let me. It's vanilla. This is Dewey Steffen. Is this one of your promotional things? Were you just talking to the guy from the soccer game? Everyone's promoting stuff. Everyone's promoting stuff today.
You should be promoting stuff every day of your life, Charlie. And I think you know that as well as anybody.
That's right. We do promote a lot of stuff here. Where'd you get these? Are these the good promotions?
Yeah, absolutely. I think you can get them wholesale for under $1, and then you can give them away. And how's it taste? How's it feel?
It feels pretty good.
Not bad, right?
It's pretty good. You got some more?
Yeah, we have a podcast brand, What Do We Do Podcast, and we have spicy mint.
I don't care about that. I care about
spicy mint chapsticks.
Mint? You have some mint?
Mint. That's the podcast.
Yeah. Oh, you have to do the podcast.
Yeah, mint is the spicy. The vanilla is the smooth, Great Lakes Wealth investment. But the edge, the mint.
Throw it.
Yeah.
Yeah. Thank you. This is the spicy one?
Yeah.
Well, I'm keeping this for later.
Yeah. Not bad, huh?
What else do you have?
That's it today.
How you doing, Dewey? Dewey Steffen here, Great Lakes Wealth, investor extraordinaire. Thank you for being here. What do we want? We want to talk about a lot of things. Stock markets is going crazy, isn't it?
Stock market, bond market, IPOs, the whole interest rates, you name it.
Why is the stock market? Does oil drive the stock market now?
Oil, I guess that's a good question. I don't think oil drives the stock market, no, but it's certainly a headline.
It's a headline, and everything that if you read is if the war in Iran is done, the stock markets are going to go up. The stock market's up, isn't it?
Yeah, it's an all-time high after today.
Why is that? What's people are saying it's not? I mean, the stock market's doing pretty good.
Yeah, very, very good. I mean, year to date, the Nasdaq went from -10 to now it's up 17%
Is that
year
why
to
they're
date.
clapping? Is that why they're clapping?
There you go, 4 o'clock, ring the bell, ding, ding, ding.
Oh, that's right, 4 o'clock.
Yeah. So they're just showing a replay. But besides, the S&P is up 11% year to date, and this is just through the end of May, Charlie. And the Dow is the laggard at just +6.
If I invested $100,000 on January 1st and I sold it today, I'd get $111,000 back?
With the S&P 500, that's correct.
Well, that's
and it would have dropped to 90,000 first. It would have gone to 90 and then up to 111.
So I could have
timed the bottom.
I could have had a lot.
Could have timed the bottom.
But do you think it's going to go up?
The S&P?
Yeah.
Well, over time, for sure. I think it's going to go up a lot more over time. But in the next 3 to 6 weeks, who knows? 3 to 6 months, who knows? But 3 to 6 years, I bet it's higher.
But just why do you think it's up though? Again, we have gas prices are so high, and the cost of meat is so high, and the cost of eggs are so high. I mean, everything's costs so high. Why is the market up?
Well, so the core inflation is not that high. Core inflation is just around 4%. And you do have oil that's up year over year. You certainly have many other things where inflation is absolutely high.
None of it's more than 11% though, is it? Well, gas is more than it.
Yeah, gas is 100% year over year from 60 to 120 almost. So call it 50% from 60 to 90 would probably be better.
What's it called? The living standard of living, or cost of living, or
cost of living adjustment.
Cost of living adjustment.
Yeah.
So if we added that in, inflation plus the stock market, we're low then.
Well, again,
a dollar doesn't buy as much. Put it that way.
We still have a dollar not buying as much, but in the markets, if the market was up 11% year to date, and a whole year of inflation would be 4%, so you'd only have 2% year to date if you were going off of the core CPI and then core cost of living, all those things you would be up. So that's
so. How do we break this down? If I'm a bullish person, that means good. How do you spin this so the economy's doing well?
Well, the economy is doing well, and there's no spin to it. So you look at GDP. So GDP, gross domestic product, okay, might be what some would say anemic at under 2%. So it tracked, I think, 1.6. And we had some issues last fall because of government shutdowns and tariffs and other things. So a lot of the numbers may be skewed, but the facts are the facts. The GDP is positive. So if you have 2 quarters of negative GDP, that's a recession. We don't even have one GDP backwards yet. So
even though it goes up a percent up, That's good.
Positive GDP, gross domestic product. That's good. And you have core inflation that's only at 4%. They'd like to get it down to 2%, but it's not 9% like it used to be. And the third component is earnings. So corporate earnings, especially this chip sector, if you've paid attention to the Nvidias and the Microns, I'm not saying they're worth what they're trading at, but the earnings have been blowout in some of these sectors and some of these stocks.
Is it all that AI stuff too?
It's just, again, Ford Motor Company record revenue profit projections as well. So it's not just the tech, but it's, again, you got to pay attention to the S&P 500.
So we look at gross domestic product, which is 2% up, and then we have inflation, right?
Right. Slowly trending higher at 4%, 4.3%.
We want that lower.
We want that low. The Fed's going to target 2%.
And then we have earnings. Those are the three factors. Company earnings.
Company, corporate earnings. You got it. But
we want those to be up.
You want those to be up as well. And then also you have unemployment numbers. Those are important. Unemployment or employment, depending on how you.
Hold on. And we add all the stuff up. What is it? What does it mean?
Everything is positive. Everything is positive.
Well, inflation is just.
Inflation is low, but creeping up.
And what'd you say earnings? Is there a measurement for earnings?
Earnings, there's the S&P earnings for this year, for next year. Those are positive, but they're also perhaps at bubble status. So they're at, I think, $121, which is above trend by a fair amount. So things may be becoming bubble-ish. Would be a phrase as well.
What about unemployment? Where's that?
Unemployment is low. That's around 4% as well. So employment is doing very well for the short term.
No measure. We never have a zero unemployment, do we?
Correct. Anything under 4% is considered full.
Huh. Interesting. Huh.
Yeah, and then there's a few more to pay attention to. So the bond market, so interest rates, right, and the Federal Reserve and the Federal Open Market Committee, they'll meet again on June 16th and 17th, and they're talking about interest rates. And so if the Fed raises rates, that's one thing. They keep them steady. That's another thing. And they drop them. That's a whole nother ball of wax. So you have interest rates, but the way we on Wall Street would look at it is the bond index or bond prices. And as we said, the S&P is up 11% year to date. Guess what, Charlie? The Ag Bond Index, the aggregate bond index, is minus 1.7. Let's round that to -2 on the year.
What does that mean?
So that's the bond market. That's the bond index. So you have stocks, bonds, and cash. If you have your pie and all your investments, forget those other side investments. But so the bond market is down on the year, and the S&P is up on the year. And so in a normal year, you would rebalance. You might be selling some of your stocks and buying some bonds, or you just need to pay attention that the bond market is negative.
So is that means a good time to buy?
Well, maybe a good time to buy bonds or rebalance. It depends on what we're trying to buy.
And when you say rebalance, just get out of stocks and into bonds?
If that's, again, in your category of rebalancing, but you have a situation, period, where year to date, S&P is up 11 year to date. Normally, it's historically, 10 for a whole year. And the bond market is normally up 4 or 5 per year, but it's -2 this year. So the trend can continue, ups and downs for the S&P and the bond market. But over time, if you rebalance, you will be selling high and buying low.
Anything else we should be looking at?
You got gold prices, so we'll pay attention to that. And, there's a few other things out there.
Gold's high, isn't it?
It's down. No, gold was up to over 5,000 an ounce. It's back down to 4,500 an ounce. So that's a 10%.
Is that a good buy?
Everything's relative to your own personal situation,
Did you
Charlie.
buy gold now?
You should have a little bit of everything, Charlie. But
a little bit of everything.
Yep. And the funny part about gold is that it's usually a hedge against inflation. And as you said about the oil prices, and that's the biggest spike in inflation. And if inflation overall is trending higher, you would think gold would be participating more as a hedge against inflation. But undercurrents are that maybe inflation is going to go faster as you thought. And if the Fed raises rates, you don't want gold because it doesn't pay a dividend. You might as well start buying some bonds. So there's some things. That's 2.0 if you follow along.
Damn, there's really a lot to learn here, isn't
There's a lot. And we got the SpaceX IPO coming on June 12th. So get your seatbelt, get your helmet.
Are you going to buy that?
How much is it? I'm not getting.
How much is this IPO?
Well, to be determined any day now by Sir Elon Musk, but it's talking to be $1.7 trillion of the valuation of the company.
So how much
currently the company is valued at $824 billion to $1.2 trillion if you include the X/Twitter, which is part of the deal.
So how much does that equate per stock?
Well, that's a great question because there's, I think, something like 70 or 80 billion is all they're raising. So I don't know what the stock price. We'll find out within the week. We'll find find out. June 12th is go time. That's the launch date. And so within a week.
When's that launch date?
Launch date is June 12th as of now.
June 12th.
T minus, 12 days.
And is it just called X? What's it called?
It's, well, no, SpaceX. And I think there's a ticker out there, SPCE, I think, but don't quote me on that.
So that's the largest IPO. What are they gonna do with? Do they need that much money?
Well, they're only selling enough to raise, 80 billion.
A mere 70, 80 billion.
Yes.
And do you know what they're going to do with it?
I don't. I'm sure it's disclosed in the filings, but I don't know exactly.
We gotta get you back here, okay? Let's get you back and just explain some of these. Now that I got all the stuff written down, we'll digest it even more. This was a nice educational.
It's just a start. There's a lot more.
We'll hold that thought for next time. Dewey, Steffen, Great Lakes Wealth. Always good to see you.
You too. Thanks for having me.
All right, you got it. I'm gonna take a quick break. When we come back, the city manager of Hazel Park. That's coming up in just a moment.